Good afternoon, everyone. Welcome to Impact, the California MBA podcast, where we break down legislative and regulatory issues shaping the mortgage lending industry and what it means for your business. My name is Paul Gigliotti, CEO of the California MBA, and today we're continuing our conversations around artificial intelligence and automated decisioning systems, the legislative bill AB 1018. This is a very timely issue because California is looking closely at how automating tools are being used in consumer-facing industries, including financial services and the mortgage lending industry. And for our industry, this matters. It's not our first time around at the block with automated underwriting decisioning tools. We've had those since 1997. So mortgage companies are already operating in a highly regulated environment. We have fair lending obligations, disclosure requirements, underwriting standards, investor guides, auditing expectations, vendor oversight, and compliance responsibilities built into nearly every part of the process. So the question is not whether technology should be used responsibly. Of course it should. The question is how we make sure new policy understands how mortgage lending actually works in the real world. Today, I'm joined by Artin from Premier Plus Lending, a new member at California MBA. Artin brings the perspective we need in this conversation, someone who's close to the actual business of lending, close to borrowers, close to loan officers, and close to the operational realities lenders are dealing with every day. Artin, it's great to have you. Thank you for being here.
Yeah, thanks for having me, Paul. I'm really excited to get into this it's a big topic.
It is, it is. And what I find so fascinating is, it's like I said in the opening, it's not new. We've been using underwriting systems with OCR and technology that supports decisioning for decades. It's blown up now because of that conversation around AI. So before we jump into the details, I want to level set a little bit and talk about AB 1018. It's part of a broader conversation in California, artificial intelligence and automated decisioning systems. And while the intent is focused on consumer protection and accountability, the concern for mortgage lenders is making sure the rules are clear, practical, and do not create duplicative or conflicting requirements on top of an already heavily regulated process, on top of which there are multiple artificial intelligent bills for consumer financing at a federal level. So we don't want to layer this any more than we need to. Um, Lenders right now are using technology in a vacuum. They're using tools to help manage compliance, reduce deficit, improve communication, support underwriting, organize documents, uh, detect issues, and create a better borrower experience. But at the same time, lenders are under real pressure. Volume is so tight, as you know, and cost to originate is still really high. So affordability is still challenging, and borrowers expect speed, clarity, and confidence. So with all of that, Artin, from your seat as a lender, when you hear conversations around AI and automated decisioning systems, what comes to mind first? What is the first thing you think about?
I think one of the challenges in these policy conversations is that AI can get talked about very broadly. But inside a mortgage company, technology is being used actually in very practical ways. It can help with like document collection, borrower communication, income review, compliance checks, workflow management, quality control, and just team efficiency. So not everyone's touching the file 10 different times on the way out where it doesn't need to be.
Yeah, that absolutely makes sense. And that will help drive down. I mean, you would sit back and think, well, that will help drive down the cost to originate, which would then speed up the process, right? Therefore, saving everybody time and money. Artin, how are lenders actually using technology and automation today? Where are you seeing it help the most in real day-to-day work of
Get,
originating loans? Like, get real with us for a second.
get
Not that
real
you're
with
not real, but
it.
give us the dirty.
One thing I always come back to is that mortgage is still a people business. Technology can help automate, it can help, AI can help at all, but at the end of the day, we're all helping people make one of the biggest financial decisions of their lives. Borrowers want speed, they also want trust. They want digital tools, but they still need guidance. And they want answers quickly, but they also need the process to be accurate and fair. Where we've used that AI specifically is document tracking and how to manage a workflow from beginning to end, trying to make the process more efficient. The less amount of people we need to manufacture a loan, the less the cost goes down, and that cost can get passed on to the consumer because that's all what we're building towards. Is like how do we deliver the best price to a customer?
Yeah. It's a weird time right now. Consumers, us as consumers, we're really fickle. Like we want self-serve, but we want our handheld. And so that's a hard combination. And that's really the usability of technology, right? When you talk about AI, you're really talking about giving the ability for, more loans to come through your pipeline with greater efficiency, solid data analysis. You don't want any buybacks. Nobody wants that. And you want your humans to be able to do more. That's the use of technology, not to get rid of the human, but to give them kind of like their superhero cape, right? So you said that beautifully. Artin, how do you think about the balance between technology and the human side of lending? And where can technology improve the borrower experience? With that being said, I think that's the crux of this question. How can technology improve the borrower experience? And where does the loan officer or lending team still matter most, as you were talking about human in the loop?
Yeah, so I mean, we've talked about this internally, and so the thing with the loan is that you can get 99% of the loan process right, but not getting that 1% will derail the whole process. It will derail the entire loan. So, and we're not in a place where AI is like 100% accurate. We still need that human interaction. So, we need AI to do a lot of the grunt work, the admin stuff, the basics, but we also need humans to go in there and check it and make sure it does the work. Basically, we look at AI as like a helper, as someone that can help piece things together, and then we have the person come in there and check it all. So that's how it's incorporated in our process, and that's where I see that where the human piece of it, and ultimately, like for the loan officer for sales, on that side, it's what I've talked about with loan officers that I'm recruiting. That my loan officers is that the thing that AI can't really do, I mean, at least in this stage, is like they cannot create a human, it cannot create a human experience, right? So there's an emotional part of this process where it's very trust driven. So it's about to ultimately like we're in this business to create relationships, and as a salesperson a lot of these things will get automated and they will get better and the process will get better and you'll need maybe less human interaction on the sales side of things, but where AI will not replace it, is creating human relationships with referral partners. And I think if I was a loan officer and I was building my business looking into the future, I would just spend my energy and time creating deep relationships with people that can help bring you business.
Right, and because now you have the technology to do that, right? You don't have to calculate
Exactly.
the income, you've got a solution to do that for. That's a great point. I wanna shift gears, real quick in our last question, and I think this is something that's really important. It's a part of AB 1018 because that bill what that proposed bill states is, the usability of underwriting, decision systems, call are bias, right? And actually artificial intelligence is quite the opposite. So that's another piece that I think matters greatly, and that's access to credit. If technology is used correctly, it can help lenders be more efficient, more consistent, and more responsive. It can help reduce errors. It can help teams manage complex files. It can help borrowers move through the process with clarity. But if we create rules that make lenders afraid to use the tool, that improve the process, we may unintentionally move backwards. So, Artine, how do you think responsible technology can support access to credit? And what should lawmakers understand about the connection between operational efficiency cost and the ability to serve more borrowers? It's kind of a mouthful.
Yeah, I mean, if technology is used correctly, it can help lenders be more efficient, more consistent, and more responsive. It can help reduce errors and it can help teams manage complex files. It can help borrowers move through the process with more clarity. But if we create rules that make lenders afraid to use tools that improve the process, we may unintentionally move backward. And that's what I'd love to avoid is like, how do we use this technology to move forward in a way that uh, of course it has to be safe, but at the same time too, it's like, how can we make the experience better for everyone in the process?
Yeah, that's so spot on. You said it just like a CEO of a lender. That was fantastic. Artin, this is a great conversation. I really appreciate your perspective and the work Premier Plus Lending is doing to serve borrowers in a challenging market and the growth trajectory you're taking on. Congratulations. For our listeners, I think the takeaway is clear. AI and automation are already part of the mortgage conversation, but they have to be understood in context. Mortgage lending is already highly regulated. Lenders are already working under significant compliance, operational, and market pressures. And when technology is used responsibly, it can help improve accuracy, reduce friction, support compliance, and create a better borrower experience. AB 1018, that proposed bill, is a reminder that policy around AI is not a future issue, it's happening right now. At the California MBA, our role is to help connect what is happening in Sacramento with what is helping inside the real business of lending so that consumer protection, innovation, and access to credit can all move forward together. Our team, thank you again for joining us. Thank you for being a part of the community at California MBA. And to our audience, thank you for tuning in to Impact. Thanks for listening.
Thank you, Paul.